And we are recording. Don't say anything you don't want anybody to hear, Kerry.
Yeah, I'll try not to.
Hey, everybody. Thanks for joining us. We appreciate you taking the time today. We're probably going to take 30 to 45 minutes, and we're going to go through today some of the topics we cover in our Owner Series class so you can get a taste of what that's like and the information that we cover. And just a real quick background on me. Some of you may know my voice from listening to our podcast, the Service Contractor Radio Show. If you don't know it, I'll plug it here. You can go wherever you get podcasts and find it. You can go to our website, which is up here, by the way, www.serveextra.com. And then you can download podcasts, you can subscribe, you can do all those things. So one of the things that I always say is that I grew up in the trades, which is true. When I was a kid, my parents had HVAC business. My grandparents had a fuel oil delivery business. I started when I was 15, just riding with a service tech as a helper. You know, whenever they needed help with something, that's what I did. I fetched tools. I have gotten the bubble grease. I've looked for the bucket of steam. You know, I've got the pipe stretcher. I've done all those things. I've been under every type of house you can go under, in every attic, and hot and the cold and everything. I filled oil tanks, all these things in HVAC. Finally became a service tech, then a service manager, then an operations manager, and then ended up working for a franchise company as a franchise consultant, and later as an executive with air conditioning franchise, and then also a president of another brand that they had at that company. Actually did landscaping. Then came to SET in 2017. I've been here ever since. And essentially, I've been helping small businesses all over North America, Canada, and the UK for about the last 20 years or so, 20 years in March. So one of the things I found has become a passion of mine, even though I came from the field. One of the passions I developed was knowing the numbers. And if you ever spend any time with us and you do anything with us, you'll hear about personality profiles. And, you know, DIS or C, this is the high C in me coming out, that I just really love numbers and information because I think it tells a story. And so as I was coming up through the ranks, I ended up taking the time to get my business degree. And what I found was there's a lot of people in business that I'd worked with over the years that just the stuff we're taught at a collegiate level, and my friend Dr. Kerry Webb here obviously is a PhD in business and a professor, and I'll let him talk about that. But what I found is there's probably a lot simpler way to get that across. And I ran across business owners, one in particular, a friend of mine named Tommy. He said that being in business for 20 years or whatever it was gave him the business degree that he never earned in college. And what I've seen over the years is I would take anybody who has been in business, and I joke about it because we never want to do this, but anybody who's ever put payroll on their credit card probably knows more about business than the freshly graduated MBA.
No doubt.
And one of my passions is I want to take what I learned in both worlds when I got my business degree and my practical experience in the field and working in businesses for years, and I just think there's a better way to convey that information and those business principles. And so when I came to SET, Dr. Kerry Webb was already here, and he was working on a program, and he graciously asked me my thoughts, and we got together and collaborated, and what we've come up with is what we call our Owner Series. And we cover basic principles of business, from understanding your financials to your true break-even. Are you priced right? How do you do great training sessions and things like that? Yeah, Kerry's bringing those up now. And these are the kind of things that we cover in our Owner Series. And what we thought we'd do today is we take a couple of little snippets out of this and just give you an idea of the materials we're going to cover. And what I want to go over with you is what I figure are the three basic principles of business for me. When I see a company, these are the three things I need to see in that business. I need to see targeted sales and marketing, or targeted marketing and sales. And that means it's not just open the door and whatever we get, we get. We have actually targeted the business we want to get through our marketing. We've actually purposefully done that so we can sell that stuff, whatever it is, whatever trade you're in, whatever division of that you want to be in. If we have that, we're good. The second thing is operational efficiency. Because let's face it, if we sell the work correctly at the right price, if we market it, we sell it, we get it at the right price, and we operate efficiently, we can make money. But the third thing is financial awareness. We have to know how to look at the financial picture of our business and understand what we're seeing and what needs to be done. Now, I've worked with many, many businesses that have it right. I've worked with many that don't have it quite right. I've worked with a lot of CPAs and accountants out there. Nothing against them. They're great people, but sometimes they can make it really complicated. So I want to take one principle from that. So financial awareness. And one of the things that I think causes a lot of stress for owners is they don't understand what really their true break even is. And that's going to require just a smidge. For those of you in the South, that you know what that is. But for up north, that's just a little bit. We're going to do a smidge of financial training, and then I'm going to show you how to calculate your true break even. So, and then I'm going to turn it over to Kerry, and Kerry's going to tell you what you can do once you have that information, once you understand what's on the board here, and when you have your true break even, what that means and what you can do with it. So let's do a little financial primer here, Financial 101. Two main financial statements we'll look at in the business are going to be the P&L and the balance sheet. I went ahead and wrote them up here, and these are not drawn to scale, and I'm sorry, but this is just my handwriting. So what we're going to do with our profit and loss or our income statement is we're going to take sales, and this is all the work that we've sold that we've actually done. We don't really count it as sales until we actually do it, and that we've earned the money. Whether we've been paid for it or not, it goes here. So then from that, we're going to subtract our cost of goods sold, or COGS, so COGS. And the way I describe COGS is there's things we can debate whether they're a COG or not, and it's okay. And then there's certain things that are just going to be cost of goods sold. But the way to practically explain this is the cost that we have because we do business, okay? That's the cost that we have because we do business. And so if we're doing business, we're paying labor, we're buying materials, we're buying parts, we're buying equipment, we're buying supplies, we're buying permits, and we're paying maybe some subcontractors. We're paying commission for it to be sold and those kind of things. So those are costs we have because we do business. We make a sale, we have cost of those sales. So COGS are what we have because we do business. When we subtract COGS from sales, we get gross profit. And here we have this word, profit, which most people associate with that's what goes in your pocket. Well, if we've just gotten to this point, that's not profit yet. This is just gross profit. So this is the profit we've made just from subtracting the cost of doing business from our sales, from the work we've completed and we've earned. We get to gross profit, and then we have to subtract expenses. People say sometimes, well, aren't you really just trading words there, cost, expenses? Well, I like to be distinctive on that because a cost is something that I consider part of doing business, and an expense is something we have just because we are in business. So we're sitting in our shop that we're paying rent on and utilities. We've got our phones hooked up. We've got our internet. We've got computers. We've got salaried people in our office. We've got insurance and licensing on the vehicles. We've done advertising and those kind of things. All of those are things we have just because we're waiting to do business. We're trying to do business. So those are called expenses. This also is another place where we can get another word, overhead. This is the overhead. Here's the cost you have for doing business. Here's the overhead or expenses you have because you were in business. And again, there's a couple of things that can go back and forth, but for the most part, that's how we're going to classify these. Cost of goods sold, these are costs we have because we do business. Expenses are costs we have, or expenses we have because we are in business. And of course, that after we subtract that from gross profit leaves everybody's friend, right? Net profit. So here's the thing about net profit. Most people, hey, did you make any net profit? Well, everybody makes net profit, even if it's negative. Okay, so remember, net profit can be positive or negative. So that's a primer on the profit and loss or the income statement. Now let's go over to the balance sheet. Well, the balance sheet is based on a formula that says assets, or things on this side, equal liabilities plus equity. So if we had numbers here and we added up both columns, they would have to balance, and that's why it's called a balance sheet. And so without going into too much detail about this, of course, assets are things, and they can be tangible or intangible. It's cash. It's those kind of things that you own, that you have. Liabilities are things that you owe. So this could be credit cards, line of credit. It could be loans on vehicles and things like that. It's also trade payables or accounts payable, things you owe your vendors. Just similarly, assets could include tangible or intangible. So you could have accounts receivable here. So you've done the work and you've earned it. It's a sale, but you haven't been paid for it. That's also an asset. So you got assets, tangible or intangible. These are the things that you have that are yours. The liabilities, these are the things that you owe other people. This is the money you owe other people. It could be short-term, long-term, whatever. And then you have equity. And essentially, equity is the difference between if you took your assets, subtracted liabilities, you'd get your equity. Kind of like your house. If you figure out how much equity you have in your house, how much is it worth, subtracted how much you owe on it, gives you the equity that you have in it. So that's the balance sheet. Now, what a lot of people don't realize is these two things are linked. And what happens is this net profit number here is the only number that links these two together. Okay? So everything we do here comes down to this one number, net profit. Think of your P&L as your diet and your exercise or lack of it, or how good or how bad you eat, whatever. Think of all that coming down to a number of this is the effect on your health for that period of time. Because this can be any date range we want. It's got a start and an end that are variable. We can change it. We typically look at these every month. And so essentially in your business, your P&L tells you how much healthier or how much sicker did your operations, what effect did that have on the health of your whole business? Your balance sheet is a look at the health of your business. Your balance sheet tells us how you fund your business. It tells us since day one, because this can't change, day one is always the start date of this. These are cumulative accounts that go all the way back to the beginning of your business. We see the overall health of your business since the day it was born. This is kind of like going to the doctor, and when I go to the doctor, you pay first, which is kind of interesting, isn't it? You pay first, then you go sit in the room, then they call you back, and they take you back and they weigh you, and they get your temperature, and then they take your blood pressure and those kind of things. But what they're doing is they're getting your vitals. Now imagine if you added about 20 more things to that, and every time you went to the doctor, they checked that. What they'd be able to do is take those, and over time, if you had those checked, say every year since you were born, your doctor could look at that and say, here's when you were healthier, here's when you were sicker, here's when you were healthier, here's the overall effect on where you are today. That's what your balance sheet does. That's long term. Now, why is all this important? Well, obviously, this is the financial awareness piece that I was talking about. And so one thing that we fail to understand when we talk about what's our break even? Well, break even, the textbook definition, Kerry, give us the textbook definition of break even as you would see it in the financial textbook.
Well, the way I don't know if I can give the textbook definition, but the break even is basically when you've made enough money to cover your costs and you have not yet made a profit.
That's right. So you've made enough money, sales, the textbook definition is when sales equals cost of goods sold plus expenses. So that means, say this was 100 and this was 50. Okay, so you're left over with 50 now. And this was 50. 50 and 50 is 100, means zero net profit, right? Okay, so here's the challenge with that. Remember I was talking about debt and what you owed is over here? Well, that's not your money. If someone you borrowed money, that's exactly what you did. It's not your money. It's their money. You're borrowing it. So as such, you didn't earn it. So it's not part of your sales. When you borrow money from the bank or you borrow money from somebody, whatever, that money doesn't show up here as sales. It goes into your bank account, but it doesn't show up over here. So as such, it's not a cost to your business to pay it back. The only thing that is an expense to your business is the little bit interest that you might pay on it. But the principal amount is never yours. It's just like borrowing a shovel from your neighbor. When you're done with it, you got to give it back. It was never yours. You can't ever count it as yours. You didn't do anything to get it other than that you borrowed it. You didn't buy it. So what happens is when I pay that back, it doesn't count as a cost or an expense. So where does it have to come from? Right here. So think about this. When you borrow money, you're borrowing against your own future net profits. So one way to look at that is if you look at your balance sheet, assets are from the past. It's work you've done. It's money you've put in the bank. It's items that you've bought, that you own. It was all done in the past. Okay? This is all about the future because you've got to pay this back in the future. Okay? Equity, the piece of it that is net profit that feeds over here, that's from today. That's from now. And so what we want to be able to do is we want to be able to fund our business not by using the stuff we've saved from the past, not by pledging our future to fund it, but by getting it funded from our activities today. So that means net profit has to be enough. So that means you have to know your true break even. And to me, your true break even, it's not having $0 here. Because one of the things we kind of joke about is if you break even, you're broke, right? Because if you come with zero net profit and you have a $500 note payment to make, where's the money coming from? Well, I might have it here, okay? I might have some money in the bank to pay it. Another thing is I might be able to borrow more to pay it, but why would I want to borrow to pay back debt? I wouldn't want to do that. The other way to make it happen is to earn enough net profit to pay for it. Okay. So how do we come up with how much net profit is enough for your business? And this is a question I love hearing people answer, especially when I'm in a group. Now next month, we're going to be at an expo and we're going to hear this and I'm going to ask people on purpose, what's your net profit? How much net profit should you have in your business? And people are going to answer. When I ask, how much net profit do you need in your business? People ask me that. Chris, how much net profit do I need in my business? Well, here's the answer. I don't know. And you're thinking, well, how could you not know? Well, I mean, I got a business degree. It's on the wall over here. But Kerry, my friend here, he's got a PhD in business. And how much net profit do you need in your business, Kerry? Kerry doesn't know. Because what Kerry needs to know is more about your business before he can say what that is. Here's how we get to it. What we're going to do, when we really say how much net profit do you need in your business, net profit moves around every month, okay? The percentage can change. Definitely the dollars change, especially if you're in an HVAC business. If you're planning for the slow seasons isn't that great, it's going to dip and then it's going to rise. So what we've got to know is, first number is, for how much net profit you need, is what's your debt that you have to service every month. So what is the debt that you have to pay every month? That's to stay current. That's not to pay it off early. That's to stay current. Now, I'm a fan of Dave Ramsey, and I know that if you follow his stuff personally, that he's a no debt guy, and he's got good reasons for it, and his process worked for him, and it works for millions of people. I love Dave, and I like answering how are you doing, Chris? I'm better than I deserve. That's what Dave always says, and it's true. But sometimes we carry that into business when it doesn't make sense. And I'm sure he'd argue with me on it, and I'd be happy to do that. Dave, I know you're watching, so hey, give me a call. We'll talk about it, and you can set me straight. But most businesses have a little bit of debt they have to cover, and that's okay. Debt to grow is okay. Debt to operate, bad. Okay? So first thing we need to know is what debt do you have to cover every month? Because guess what? I don't care what your sales are. I don't care what your percentage of net profit is. If you've got to have $2,000 to pay debt every month, then your net profit has to be $2,000. Kerry, can I get an amen?
Amen. Double amen.
So your profit has to be $2,000. So whatever your debt is. The next thing that happens in businesses, and it always surprises us even though it shouldn't, is reinvestment. And most of the time, the reinvestment is controlled. You know that, okay, starting next month, I want to increase this spend because I want to increase marketing here, or I want to do this thing here. I had planned to bring it on the truck, and I know there's going to be some one-time expenses that I need to cover. Those are planned reinvestment. And then we have what some of you have heard me refer to before as oops. There's the oops reinvestment, which is, okay, oh man, Joe fell through a ceiling. He stepped through a ceiling today. Or the transmission on truck 15 went out. I knew it was going to go. Right? Those kind of things that are unexpected. So we got to put something in there for that, whether it's planned or not planned. So just say reinvest. And then the last thing we seem to fail to do in business, we do it personally, but we seem to fail to do in business a lot, is save. So we need to plan how much we're going to save. So pop quiz, if your debt's $2,000, your reinvestment is $2,000, and you want to save $1,000, and I'm using small numbers, I get it, then I'll let you answer in silence, shout it out at your computer screen. How much does your net profit have to be every month? Okay, gold star if you came up with $5,000. That means no matter what your sales are, no matter what your costs and expenses are, the bottom line better be $5,000, because that's what the debtor wants to have. That's what it's probably going to cost you to reinvest in the oops stuff, maybe some planned stuff, and then have enough to save. And we have to stick to that. Now, if we want to say what our die-hard, very lowest possible thing to have is going to be, is we got to have enough to cover our debt and any surprise stuff that may come up. So it can be lower than 5,000, but if you really want to stick to your true break even, it's got to be that. Okay? So we can work it backwards to find out what your sales have to be every month. And the way we would do that is we'd take our 5,000, add to it what our average monthly expenses are. Okay? And if we know our cost of goods sold is, say, well, I'll just work one for you. How about that? Let's say and we know we got to have 5,000 and our expenses are 55,000 a month. Then that means that our gross profit has to be 60,000 a month, right? Because we add these two together. And if we know this is 50% usually, and again, I'm using an easy number, then that means our sales have to be $120,000 a month at this and this to generate that.
Dang, you're smart for a guy who wasn't born in Texas.
I know. Well, hey, I was born in Virginia, and I know everybody wants to get there as soon as they can, but they detour through Texas, right? So that's just a look. Now, don't get me wrong. I'm not telling you that as long as you know this number, there's no stress, because I'm not selling you that. At least you know, though. You have a destination if you know this number. And yes, we know sales come and go. But, so we have to fluctuate some of these things. But we can forecast this. We can target this. So we go back to the other things. Targeted marketing and sales. We target to sell what we need. Operational efficiency. Let's make sure we do it and hit the numbers that we're supposed to hit efficiently, so we can be left with this to cover this to give us this. This is the financial awareness piece. Now, some of you out there may have attended our owner series. One thing I will say, of all the things I've done in my career, the 2 hours or so that it's 3 hours we spend on this in the 2-day class, I have people coming up to me after that saying, I've been doing business 20 years and I've never heard anybody explain that way. I get it. And when I hear that, that's it for me. I know, man, that energizes me, because that's a passion of mine, is I want people to understand how uncomplicated it is. It's not easy to do, but it's not complicated to understand if you get it explained the right way. And it's powerful information that allows you to do a whole lot of other things in your business and to at least lessen the stress. So, Kerry, I'm going to turn it over to you. Tell us what we can do with this information now.
All right, great. So, guys, I got to say this. If Chris ever gets tired of working with us, I think he could be a weatherman in an instant, man. He did so good at, doing all the pointing just right. You're amazing.
Well, Kerry, we get practice at it, right? I mean, I had a green screen before, but then I realized this is just as easy.
I know, man. Sweet. Okay, guys. So let me give you a little about my background and a couple thoughts for you to help you today. So, I grew up. I was born in Louisiana. Grew up a country boy. About 10, we moved to Texas, and I've been here for the most part ever since. Did live in Florida for a little while, but man, it's dadgum hot down there. So I came back, with school, got a degree, and I'm working with a contractor one day, helping him with his business, and he said, Kerry, I was skeptical about having a PhD come to my company. I just didn't know if you'd know anything that'd be any use to me, but I figured out what your PhD stands for. And I said, oh, well, hey, tell me, I'd like to know. He goes, I think you must have got a PhD in plumbing and heating and digging, because dadgum, you know a lot about this construction business. Well, guys, I want to tell you, I care about contractors because I really believe the small business owner is the heartbeat of America. You guys are the ones that are taking care of communities and families and helping people support and take care of their families. Without clean water, refrigeration, and electricity, America becomes a third world country. So Chris and I really care about helping you have a successful business. Now, a buddy of mine I grew up with, we went to church together when we were younger. He's now the railroad commissioner for the state of Texas. And, the Railroad Commission is targeted with economic growth and protecting the natural resources. And in Texas, we really believe, we love our state just like folks in other states do. We want to take care of it. But sometimes I think we overlook the fact that it is a privilege to drive in Texas. It's a privilege that we can lose if we have too many infractions, but it's also a privilege to own a business. And, our state legislatures just passed a bunch of new laws, and I'm going to be presenting, I think, some laws to them for some citations. Some of them involve, they might even be felonies, failure to control your operating cost, or failure to price for the correct cost of goods and services, or even worse, fleeing from a business coaching officer or fleeing the scene of a customer without collecting any revenues. Now, I know none of your technicians or none of you guys have probably done this, but what we find all the time is companies doing little things that are crushing their net profit, and they're doing things because they think it's more efficient to do it the way they're doing it, when in reality, you can go broke being efficient. If you want to make money, you've got to have a business that is effective. If you're driving 50 miles an hour in the right direction, that's way better than 80 miles an hour in the wrong direction. And I've worked with contractors and companies that were making lots of money, but they didn't really have a good business plan. And at the end of the year, they had very little to show for it. Let me give you a couple examples. In the last 2 years, Chris and I have worked with several businesses. One, last year, we had a negative 6.8% net profit on about a little over $1.5 million in revenues. This year, after taking the owner's class and diligently following the plan that we will help you build, that you will leave the class with, he is now on target to do $2 million this year, and he is already at 12% net profit. Guys, that's over an 18% swing. Another client we worked with came in negative 10% net profit. This year, HVAC company, I know you're going to think I'm lying, but I work with him every single week. I get his P&L every month. This year, he is at a 31.8% net profit. Guys, that's a 40% swing. And this guy's not a $200,000 or $300,000 company. He's on track to do $3.9 million this year in revenues. You do the math. Is he making money or not? Story after story, guys, of companies that come in and they're at 2%, 3%, 4% net profit. This year, they're at 14.7, 11.7, 15.3, 17.4. And you can see I'm looking at my screen because I'm looking at the numbers for their companies. Those are real numbers. Now, here's something I want you to think about. Just as It is illegal to impede traffic or leave the scene of an accident without, especially if you've caused it. It's really a crime to leave the scene of your office without knowing your numbers and operating your business recklessly or at an unsafe profit level. Guys, how many of you have a business scorecard where you know day by day, week by week, if you're making money, because you know what is your revenue per hour? What is your average invoice? And is it red? Is it gold? Is it green? Is it good? Is it bad? What's your revenue ratio? Your total revenue divided by your number of employees. This is just one tool that you'll walk away with from this class. Do you have a technician scoreboard? So every technician knows, are they red, green, or yellow? Is the average ticket gold, over $400? Excellent. Is your average maintenance invoice over $200? A lot of guys we work with, hey, they're lucky if their average maintenance invoice is $120. I had a client, their average invoice was $67 when we first started. Guys, again, it comes back to training. Are you running a business without training? Because if you're not training your people, you'll never be great like the Dallas Cowboys. Yeah, I know you're laughing at me right now. That's all right. Wait till the end of the season. I hope they don't embarrass me. I've been waiting over 20 years for them to finally get good again. Man, I hope they pull it off. But if you're a hater, that's okay. You can still hate. Well, I'll take your hate for the Cowboys, and I'll turn it back into love and help you. All right. Another thing that we do is we help you to look at every part of your business from your installers. Are they being effective? Are they installing at a reasonable number of install hours? If they're installing average under 9 hours, probably doing pretty good. If they're taking 10 hours, 11 hours, guess what that does to your cost of goods sold? Through the roof. Labor cost through the roof. Guess what it does to the gross profit you thought you made on that system sale or that water heater? Through the roof. In other words, guys, if we're not maintaining our install costs, if we don't even know what our install costs are, how are we going to hit our true break even? How are we going to make sure that we're getting the net profit that we need? A couple other things that we often forget is our CSRs. And I want to talk to you just for a second about your CSR. I think sometimes there are unsung heroes of our business. The average service call across America today is $348. I want that to sink in for a minute. The average service call across service companies is $348 for HVAC. The average service call for plumbing, almost $700. And the average call for electrical, over $900. Now, let me ask you a question. Your CSR comes to you and she wants $1 an hour raise, or maybe she's lost her mind and she wants a $2 hour raise. But you actually track her numbers and you know she books 80 or 85% of the calls that come in. You know that your average service call is going to be $348. Is it worth letting her leave and go somewhere else so that you save $40 a week that she was asking for an extra $1 an hour, an extra $40? You save that, and then you get somebody new who comes in and only books 10 calls less a week, or 5 calls, or even 2 calls. In other words, guys, if we're not careful, we're giving up $700 a week because we bring somebody in and it only takes 1 or 2 missed calls that they don't book. And we save the 40, but we give up 700. What I've learned is when business owners really begin to think about the trade-off between incentivizing their employees wisely and knowing where their break-even numbers are, crazy good things have happened. I got to tell you about a client in Virginia. This last year, they really struggled. Now, they did a lot of revenue, but they made almost no net profit. Their net profit was 4%. The year before that, it was 2%. And so I sat down with them and I said, guys, let's figure out your true break even and what you need to be doing every month. And then let's get your team excited about it. So here's what they decided. When they hit their break even, after that, they built a staggered bonus plan that every technician who had hit their individual goal would now begin to get a percentage on all of their service tickets and a higher percentage on any lead flips that they did for water heaters, air conditioning, whatever it was that they helped to sell. But they had to hit their business break even before that kicked into place. About 2 months ago, the owner's wife, she does the books, she came on our call and she said, Kerry, I'm concerned. We are paying a lot of money in commissions these days. We're not used to paying this kind of money every month. And I said, well, what are you talking? She goes, well, we used to pay about $3,000 or $4,000 a month in commissions. And this last month, we paid about $9,000 in commissions. I was like, wow, that's a lot of money in commissions. I said, what was your revenue this last month? She said, well, I don't know. I'm in charge of doing all the accounts receivable, accounts payable, and I just know we paid a lot of money. So I asked the general manager, I said, how was your revenue this last month? He said, well, our goal was to do 200,000 more than we did the same month a year ago, but we did 350,000 more than we did a year ago. I said, wow, that sounds pretty good. Let me ask a second question. What's your bank account look like this year compared to last year? She said, well, let me look. She pulls up her P&L statement last year. Her cash flow statement. Last year, we had $32,000 in the bank in this month. I said, what's your bank account now? She goes, well, my goodness, it's 198,000 this year. I said, so let me ask you a question. Would you rather go back to paying $3,000 a month in commissions and go back to $32,000 in the bank? Or would you rather keep paying $12,000 in commissions, having $300,000 more than you brought in a year ago, and having almost $200,000 in the bank? She said, well, thanks for your time, Kerry. I'm gone. See you later. I guess we need to talk anymore. This all sounds real good. I guess you know what you're doing. Guys, Chris and I have worked with hundreds of companies. And in the years that we have been really privileged to work with contractors and business owners, I want to tell you, I probably have learned as much from you guys as I have been able to share and help contractors as well. Every contractor I go and work with is doing something really well. Everyone. Every contractor I go and work with or that comes to our class has got one or two areas they really need to fix. And you know what's crazy? When we fix the things that are holding us back, the things that we're already doing well suddenly get tremendous momentum. And now our business is able to generate the profit as well as the revenue that we need it to generate. That's all we want to do. We want to invite you to come to this class to help you. We want you to be a part of this class for what it can do for your business. And if we did not feel like this was making a significant difference, I'll be honest with you, I would just tell Todd I didn't want to do it anymore. But guys, there's just too many success stories. I hope you will take a look at this and be a part of it, because we'd love to help you be another one. Back to you, Chris.
Thank you, Kerry. I want to let you guys know the next Owner Series class that we have coming up is going to be November 5th and 6th in Austin. And we got a great new venue for the sessions that we do now. Also, by the way, Kerry mentioned CSRs. Our next CSR series is November 5th and 6th. So you can come to the Owner Series, bring your business or your life partner, and also bring your CSR for some training at the same time. And just after that, the very next week, the last series that we have for techs and sales will be happening November 11th through the 13th. That'll be the last one for this year. We'll have another one scheduled in January. So I always like to give out our contact info. If you'd like to talk to me or Kerry, You can reach me at 254-733-7109. You can send me an email. It's Elmore, ELMORE, at serveextra.com. You can always reach out to us on Facebook or wherever else, and Kerry's going to write up his contact info. You know, a lot of people say, hey, give us a call or whatever. We mean that we don't do anything for fluff. You know, we want to talk to you. So if you're out there and you want to talk to us and just see if this is right for you, please call us. We will tell you. We will be honest with you and tell you this is something that would benefit your business or not. I think it will, based on the feedback we've gotten. Kerry, why don't you share your info with everybody? I'll get your video back up here again. You're muted, Kerry. Let me unmute you. There you go.
How about now? All right. So, guys, my phone number is 469-878-9322. 469-878-9322.
It's harder. It's harder than it looks, isn't it, Kerry?
Impersonation. My email is Kerry, Kerry, at Serve Extra. 1 E between Serve and Extra. Kerry at serveextra.com. Love to get your emails. Love to respond to you, help you any way I can. And guys, I just want you to know, I've been with Serve Extra, Service Excellence since 2016. In 2 months, it'll be 3 years. I have to tell you, if you knew me, you would know I just don't say stuff if I don't mean it. The finest group of guys I've worked with, guys, the finest group. And I've been working, well, you can look at my hair. I've been working a long time. But I got to tell you, the last 3 years has been excellent. And until Chris started upstaging me, it was darn near perfect.
Well, thank you, Kerry. All right, everybody. Thanks for watching today. Thanks for being with us. Get in touch with us any way you can when you want to. And Kerry, what do we always do at Service Excellence Training?
Hey, we turn learning into earning.
Bye, everybody.